Hello and welcome back to London. The UK was praised earlier this week by the OECD for its impressive economic performance, and the latest UK GDP figures are bang in line. I've been breaking them down with Jeremy Stretch from CIBC. So Jeremy, the UK GDP numbers have come in pretty much bang in line. What do you make of the breakdown of those headline numbers?
Well, certainly the breakdown was somewhat surprising in terms of the significant acceleration in net exports. That was certainly something of a surprise. I think the lack of business investment was a disappointment, although you could argue that's partly a function of weaker oil sector investment. That may be a temporary phenomenon. But also the consumption number was a little bit lower than expectations. But I think overall it still sets us up for a reasonably positive start for 2015.
Yeah, the OECD earlier this week was generally very positive about the UK economy, but there's still this concern about productivity. There are the same concerns for the US economy. Is this just a factor that we're recovering from a deep recession, or is it something that we should be more concerned about?
I don't think we should be necessarily concerned about it, albeit that doesn't mean that we should be complacent about it. Clearly, productivity and the need to increase productivity, I think, is a demand for all Western economies, not just for the UK or for the US. I think the lack of business investment is a temporary phenomenon. I think we need to see more constructive growth numbers really playing out over the course of the next year or so. I think that will encourage corporate treasurers to start to increase business investment over time and to really encourage a boost to productivity over the long term.
If we imagine the world where there was no general election about to happen, which is obviously difficult because it's looming in May, what do you think these numbers would mean for government policy in terms of austerity?
I think the process of austerity I think is ongoing, and I think the scenario is that the growth trajectory that we're anticipating should suggest that there is room for that process to not necessarily contract or really weigh on activities significantly. And I think it's notable that if you look at the breakdown of those GDP numbers and you look at them, that it was very close to being an upward revision, and I think that's also notable in terms of the growth trajectory. And I think it's also relevant in terms of what the Bank of England were going to be doing, because I think the degree of spare capacity in the economy is probably going to be eroding rather faster than we would assume, and I think notwithstanding the election, I think that's going to be the defining factor for UK performance through the next 12 months.
Yeah, so what about the election? It's the economy, stupid, the famous saying, but despite the UK economy outperforming, the Conservatives seem to have real trouble drumming home this noise that they've managed the economy relatively well. So what do you think is going to happen in terms of austerity in the real world with this election looming?
Well, I think there is a problem in translating the presumption of growth picking up relatively significantly, what that means to the average individual voter or individual worker, and I think that's really the disconnect. So I think we need to see rising real earnings. I think that will help to encourage the perception of the growth story becoming wider and broadly based. Whether that's going to happen fast enough for the Conservatives to win the election, I think, is still very much a debatable point. So I think the question as far as the election is really all about what sort of composition of government we come out with on the other side, and how quickly we can get to that composition. Because I think, of course, markets like nothing less than a degree of certainty.
Yeah. So what about the pound? It seems to me when you look at the majors that you've got the US dollar, you've got sterling as the two really strong performing economies at the moment. Is it a case that you stay long the pound?
I think you can stay long sterling for a little bit longer, but I think you have to be very judicious in terms of extrapolating that run, because we've seen a significant rebound in sterling over the course of the last few weeks. I think once you see a level north of probably 156 in terms of against the US dollar and probably below 73 against the euro, it might be an opportunity then to start lightening some of those sterling longs, because I think although we know the election is coming, although we've been debating it consistently since the start of the year here in the UK, I think international investors haven't necessarily really factored that into their decision-making process yet. And when they do, I think that will encourage a degree of reversal in sterling, at least until the election is cleared away.
Yeah, and just to finish off, what does this all mean for Mark Carney? I've been on holiday for 2 weeks, but one of the headlines I read is that he was saying what a positive the oil price slump has been for the UK economy. What do you think his thinking is and the MPC's thinking is in terms of a rate rise?
Well, I think in a sense the bank want to maintain the mantra that the next move will ultimately be up, but I don't think necessarily they want to be rushed into pursuing that process. But But as I say, I think the degree of spare capacity in the economy is perhaps eroding rather faster than the bank would like and would necessarily assume. And I think that might be the scenario that forces the hand of the bank to move a little earlier than the market is currently pricing in. And so I think in the second half of this year, assuming we don't get a very messy election, that again will provide some opportunities to benefit sterling, but also to bank on the assumption that the Bank of England will be forced to start to nudge rates gently higher.
Well, thanks to Jeremy for his fantastic analysis as always. Stay tuned to Dougal's Copy TV for more of the same, but for the moment, goodbye.